Good afternoon, ladies and gentlemen. I'll say good afternoon to those of you who are joining me here on the East Coast. I want to say good morning to those of you who are joining us in the Central Time Zones, the Mountain Time Zones, or Pacific Time Zones. And as always, we'll say good evening to any of you who are joining us from across the pond in parts of UK or parts of Europe, and good early morning if any of you are joining us from parts of Asia, parts of Australia, or New Zealand. Well, welcome to today's Power Options presentation. We're going to use the Power Options tools to find new options trades. Of course, we're not actually making a recommendation or suggestion, but we're going to walk through the search tool today to show you how you can use a search tool to help you save time with your options research and analysis for whatever strategies you're planning on trading. So it's great to see you all here. We have a lot to cover today, so let's go ahead and get started. Now, as we always like to start out, for those of you who are just getting started with Power Options, we want to talk about what is Power Options. Well, Power Options is a patented suite of search and analysis tools designed for self-directed options investors. Ernie Zerenner created the Power Options tools approximately 17 years ago, I believe back in 1997, 1996 there, with the intent to use it for his own personal account, actually. He didn't have a set of tools where he could put in option and stock criteria at the same time to identify the trades that he wanted specifically. So he created the tools with his partner, Gil there, to create a set of tools that could find and compare and analyze positions in different strategies. Now, our patented search tool allows us to search across the universe of options in less than a second to identify only the positions that match our risk-reward tolerance. Once we've identified the positions, we can quickly compare the risk versus reward, and we do offer a powerful set of portfolio tools to help you paper trade, track, and manage your positions. In addition to that, we do offer, of course, countless educational articles, help pages, and archived webinars to help you get more familiar with the tools on the site and the various options strategies as well. And of course, everyone here at Power Options uses these tools to trade their own personal account, myself included. So though we've been in business for over, about 17 years now, 16 years or so, we do have many more years of combined trading experience in all of the various strategies that are supported. Now, for those of you who don't know, my name is Mike Chupka. I'm the Director of Education here at Power Options. I've had the great pleasure of working with Ernie and the Power Options staff for the past 10 years. I, of course, have also been trading options for the past 10 years, various strategies over time, some that worked, some that haven't. I handle a lot of the coaching sessions and education and obviously the webinars on the site. The coaching sessions are important. Those of you that are currently on a trial period to Power Options, or those of you that are current subscribers to Power Options, you can schedule one of those coaching sessions at any time. They're unlimited. It's not direct trading advice. Essentially, it's a 35 to 40-minute phone conversation where myself or Ernie or one of the other coaches will walk you through the tools on the site and answer any questions that you have, show you how you can use the tools to best set up your account and manage your positions. I have co-authored also 2 books on options with Ernie Zerenner. And as I mentioned, we support over 23 different strategies on Power Options. I am versed in all strategies on the site. However, there are certain strategies I've never traded, things such as naked calls, short straddles, short strangles, and iron butterflies. Those positions just don't match my personal risk-reward tolerance. However, at the end, if you do have questions about any of those strategies, I'll be more than happy to show you the tool, show you the search tool, show you some of the functionality, and talk about the theory of entering trades and managing those trades as well. All right, well, what we're going to cover today is we had a great presentation last week, so we wanted to kind of repeat it, but it's always on the fly. It's not the same material. So today we're going to focus mainly just on the search tool. We're going to evaluate the stock and option criteria. We're going to discuss how to create a specific search for specific securities or specific needs in a given strategies, or given strategies, I should say, and then general tips and suggestions on using the search tool to identify positions that match what you're looking for. Now, not everyone online here is going to have the same risk-reward tolerance. We're going to talk about the various ways of setting up a search and managing that as well. All right, well, with all that being said, let's go ahead and navigate over the Power Options suite of tools and jump right in. What we're looking at here is the main page or the main setup of a trial account. Power Options is set up as a tab navigation system. So we have the main home tab locked in place at all times, as is the My Portfolio and the new Signature Tools tab as well. So under each of those tabs, from under the Home tab, for example, we can quickly access that coaching session schedule and register for a coaching session, a variety of material in a learning center as well to help you get started. You can follow along with the blog and view some of our educational products in the store. as well. Those of you that are just getting started, I encourage you to follow the 4 steps here. You can download or request to have us send you a printed version of our user's guide. There are a variety of flash tutorials available to help you get more familiar with the search tools, the option chain, and the portfolio tool. They're there in the Learning Center. We do host a variety of free live webinars during the week, so you want to join us for those, and you can also access the archived webinars under the Learning Center at any time. We'll talk about that later. And then, of course, our free individual coaching session as well. Now, next to these tabs that are locked in place, at the far end here, the Other Strategies tab is also locked in place. And then we have our Strategy tabs, which give us access to the tools in a given strategy. So we're starting off with the default listings. We have Covered Call, Naked Put, Bull Put Credit, Married Put, Bear Call, Credit Spread, Iron Condor, Collar, and of course the custom spread tool where we can build positions on the fly just by picking and choosing which options we want to see and what we're selling and what we're buying. However, as I mentioned, we do support over 23 different strategies, so when I click on the Other Strategies tab, if you don't see a strategy available when you first log on to your trial account or you're looking for a different strategy, we'll simply go into the Other Strategies tab, and over on the left are all of the available strategies that we support on PowerOptions, so we can just remove strategies, add other strategies, and customize our tab view based on what we're trading. Now, to go forward with our presentation today, I'm just going to ask one poll of everyone in the audience today, and what I would like to know is what kind of options strategies are you trading or researching right now? Even if you're not actively trading, you came to this webinar, you're investigating PowerOptions, you're investigating options because you read something about a particular strategy or getting interested in a particular strategy. So what are you mainly researching or looking at right now? Is it the initial trades that most of us are allowed to do when we first apply to trade options? We're talking about covered calls and naked puts. Are you looking at the protective option strategies, the married puts, the radioactive trading techniques, or the standard collar spreads? Are you looking at leverage trades such as the vertical spreads, bull put credits, bear call credits, the debit spreads, and iron condors? Are you mainly looking at call buying, call and put buying, speculating on a market movement? Or are you looking at the time spreads? And what we mean by time spreads are the calendar spreads, of course, the diagonal spreads where maybe I'm buying a call that's 6 or 8 months out in time and selling a near-term call against it, whether it be a same strike or different strike. That's the calendar spreads, diagonal and horizontal calendar spreads or time spreads. So just let us know what you're trading. Of course, if you're trading multiple ones, you can answer as many as you want, I believe, in this field as well. All right, so we've had the poll open for about a minute. I'm going to leave the poll open for another 10 seconds or so, and we'll go ahead and close the poll and move on here. Okay. All right, let's go ahead and close the poll, ladies and gentlemen. We've got a tie today so far, it looks like, unless the last vote comes in. But it looks like we have a tie today. So we have 61% of our audience doing covered calls and naked puts. 39% of our audience is doing the protective option strategies. This tie for first, 61% doing vertical spreads and iron condors. And looks like second place after the tie, we got 56% of our audience doing long calls and long puts, and then another 39% doing the time spreads. All right, well, let's hide that. Let's customize our tab view. Well, I've got covered call and naked put already there, but to save time and to save space, let me remove naked put. We can always come back to it. We have bull put credit there. We have bear call credit, so we'll move those up. I want to move iron condor up as well. Okay, so that's the 61% of our audience. Now we have 56% of you doing long calls, long puts. Great, so let me go ahead into long call. I'll just select that from our available list and click Add to Menu. And we'll just leave long calls there for now. And then we have married puts and collars. I'm going to go ahead and remove collars. I'll leave married puts. And now I'll just add the calendar call spread as well. So we have each one of our selections represented today, and we'll try to spend time on each one of them. But we're mainly going to probably focus on covered calls and vertical spreads, but then we'll show some techniques for the long calls, long puts, and the search, as well as the time spreads and protective strategies. All right, let me click Save Configuration, and this will go ahead and change our tab menu selections. Now we do have calendar calls up there, we do have long calls added, and we're all set. All right, so let's go into the Covered Call tab to begin with. Anytime you click on the Strategy tab, you will be linked to that main strategy homepage. And every homepage will look the same. Over on the right, you have your basic profit and loss chart. You'll have a brief overview pod, a couple bullet points about the strategy, and a link to a more in-depth help page. Underneath of that, you'll have the tools pod, which gives you a brief description of each of the available tools for that particular strategy. For covered calls, we have the quick find tool, the option chain, the search, sample searches and search by symbol, and then of course we have some other links there as well. Now what we're focusing on today is using the search tool. And what we want to do is take a basic point and you either use that as a stepping stone to create our own personal search or start with a search from scratch. Okay? Real quick, in addition to that, let me just add that also on the home page you'll have Learning Center menu. For the covered calls and some of the other strategies, you'll see a link of links of potential white papers or just articles on the strategy. Let me navigate back over to Bullput Credits real quick. You see we have the same setup, our profit and loss chart on the right, basic overview pod here, link and description of the available tools and also the quick links to each of those tools underneath the main tab. But here in the Credit Spread Learning Center, rather than a list of articles, we have a list of, two selections for archived webinars for you to view, the Vertical Spreads Part 1 and Vertical Spreads Part 2. All right, so you may have videos and you may have help pages, you may have interactive flash tutorials in each of the strategies. Okay, but let's start off with covered call. Let's say we just passed expiration, we're a week past expiration, or it's a Monday or Tuesday following expiration. Our previous month covered calls have either been assigned or managed, so now we're looking to get into new positions. How are we going to identify them? Well, there's two ways to start. First, if you're not sure of what criteria you may or may not want to use to identify the stocks you'd want to trade in a covered call or the option criteria, in any strategy, we can always start off with the Sample Searches menu. The Sample Searches menu, which is available in each strategy, is a listing of themed searches that we've put together. And again, these are not recommendations or suggestions. When we go into a specific sample search here and we see our trade results, we're not recommending those positions. We're trying to give you a good place as a starting point based on what types of covered calls you'd be trading. As we know, there are a variety of different option strategies we can use in our account. But in addition to that, once I select a strategy, there's a variety of different ways I can trade that strategy based on my risk-reward preference. For example, on covered calls, I could choose to be really aggressive and look for high percentage returns, high downside protection, positions with higher premium. It may work out to my benefit, but those positions that have a higher premium also have a higher percent chance of swinging against me wildly and causing a loss. And that's what the 7-11 report is. I don't recommend that one, but it's a more aggressive search. Be more conservative. We have a sample search you can start off with, broker recommended, part of the S&P 5-star list, currently in an uptrend with good broker recommendations. Covered calls just on your basic ETFs. Covered calls if you're looking for dividend stocks and out-of-the-money calls, and of course in-the-money calls. And of course we have other selections, low price to earnings, new stock highs, safety first report. Those are looking for larger cap stocks, for example. And those of you that have smaller accounts, we have some themed searches set up for you for stocks under $25, stocks under $10, and then under 15 with a high probability of being assigned. Okay, so these are themed searches that we can use as a stepping stone. So let's just go with one of the basic ones. I'm going to start off with broker recommended. It's a little bit different than the 5-star, but let's go to broker recommended. When I first click on that list, and it's going to take me to the search page. What I want you to notice is that I went from the sample searches menu. Once I made a choice, we're now actively in the search function. Okay, so this is the same view we'd see at the covered call search. Now what we're shown is a listing of trades that match the criteria. But again, these are not recommendations or suggestions. I mean, these are good stocks, what we might call water cooler stocks, things you might hear about around the water cooler at work or your office. Gilead Sciences, CBS, Valero, for example, Baidu, stocks that are, commonly discussed. But as we know, these kind of common stocks are around because we specifically wanted to limit it to stocks in the S&P 5-star list. Okay, the stocks that are recommended 5-star rating, 5-star buy rating by Standard & Poor's, and of course have a good recommendation. Now let's scroll down below the listed trades and take a look at the search field. Whenever you start off, just if you go into the main search from a given strategy and you see the default trades and you scroll down below using one of our default searches, or you came from the sample search menu as we did, you'll be able to see exactly what criteria are being used to identify positions here in the active filters. So for our expiration time frame, we're looking specifically at June. Downside protection, we want that to be greater than 3%. If you don't know what we mean by downside protection, simply hover over the link here in the active filters and you'll get a pop-up window. And this just tells us this is the percent return if the stock is not assigned, or another way of looking at it is how far the stock can drop before we're technically losing money on the position. It's defined simply as the option premium we're collecting divided by the underlying stock price. Our percentage if assigned, if the stock stays above our strike price when we get assigned, we're looking for a minimum return of 2%, minimum option bid of at least 85 cents, and some basic volume as well. Now to fine-tune our stock selection, let's go down to the bottom first, and we have this lists field where we can look specifically for a certain sector or industry, remove a sector or industry, or select a specific stock list. Because this was our themed report, we have selected the S&P 5-star list. And of course, we can choose to exclude lists as well. For basic fundamentals, we're only looking at stocks between $9 and $100. And we have some technicals entered. We're looking for stocks that have a broker rec of less than 2.6. That's based on the ZAC scale. 1's your strong buy, 2 is your buy, 3 is a hold, 4 is a sell, 5 is a strong sell. And the simple moving average, we're only looking for stocks that are trading above the SMA 50. Okay, well, that's a good starting point, but everyone has their own personal risk tolerance and what we're looking to accomplish in a given strategy. And I don't know your account size, you don't know my account size. During a coaching session you might tell me. But to start off with, one of the first things you might change in any strategy, such as the covered calls, collars, maybe even naked puts, or the married puts, anything where we're buying stock, we know our account size, and we may not be interested or looking to trade stocks that are over $65 or $70 per share. Okay, so that's one of the first things we might change. Now, as I highlighted these sections, we talked about the options criteria that are actively being used in this default search, the technicals, the fundamentals, and the lists. Well, those equate to the same tabs over here on the right. So I have my options tab, my technicals tab, fundamentals for the stock as well, and lists. These are the same 4 tabs you'll see in every strategy. What's going to be different in every strategy is essentially the information that's in the option tab. But before we go to that, let's go back to square one. We came into a search. We picked a themed search from the sample searches menu because we were looking for protected stocks that maybe have a good buy recommendation and a good return. So we picked our that S&P 5-stars list. Now, I look at my active filters and I just said, I'm not going to be trading stocks that are above $65 per share. Well, I can just navigate over to the fundamentals tab and change that. From the active list, we can also click the magnifying glass icon. That'll take us right to the field we clicked on and highlight it for us. So now I can make my change. I'm only going to look for stocks that are between let's just call it $75 per share. Now, I want you to notice that when I made that change, the text in our active filters link changed from the solid black to red text. This tells me that here are some of the this is a criteria that I've changed in my parameter field, but I've yet to submit it. Okay, so let's go ahead and submit that. That'll knock out Baidu naturally. We saw that at about $98 per share. But it leaves most of our other ones, Gilead, CBS, Akamai, Valero, USG Corp, and Manitowoc, which I've seen before in the different search tools as well, or search results. Okay. Oh, let me remove the arrow. All right, so we just made a subtle change, but we can also make other changes. If I wanted to look for a higher percentage return or a higher downside protection or expiration time frame, I wanted to increase that. And again, as I mentioned, the technicals only shows you what's being used. If you wanted to use a different series of fundamentals or technicals, we'd want to go directly into that tab as well. Okay, well, let's talk about there we go. Let's talk about the options tab for covered calls. So we know that we were using some of those basic filters already, that we were looking specifically for the June expiration series, which is about 30 days away, I believe. Now let's say that when you're trading your positions, covered calls, credit spreads, you do want to look for the shorter time frame, but let's say you want to go further out in time. that you're okay looking maybe 60 days out or 65 days out, 1 or 2 months out? Well, I could choose to select July, but an easier way to accomplish what I'm attempting to do there is I'll select all months from my expiration time frame. Now I'll put in a days to expiration of, let's say, 15 to 75. Now again, my active filters is showing me in red that I've made a change to my days to expiration field and my expire time frame, but I have yet to submit it. Okay, so this will increase the range we're looking for. Now also you have fields that you can screen for time value. If you want us to look for a specific monetary time value, percentage time value. For those of you that use implied volatility, all right, whether you want to look specifically for a lower implied volatility or a higher implied volatility. You know, implied volatility is the catch-22. If I'm looking for covered calls, but I only want to look for positions that have a lower implied volatility because I'm concerned that those with inflated implied volatility might mean higher risk and higher fluctuation, well, I could simply put an implied volatility field here of blank to, let's say, less than 1 or less than maybe 0.75. What's the trade-off? Well, lower implied volatility means that there's not an impending event that might come up and may cause the stock to fluctuate wildly, but it also means your option premiums are going to be lower. So if you're more risky, you may want to look for a higher implied volatility, let's say of greater than 0.95. This would find you much higher premiums, positions with calls that have much higher premiums, but also means that there's something coming up that may cause the stock to fluctuate wildly and cause losses on your position if it moves against you. Many investors like to use the implied volatility over historical volatility or implied volatility over the stock's implied volatility index to measure overvalued or undervalued. And again, if you're not sure what that filter means, we can just hover right over that link there. It gives us a pop-up definition. An IV over HV ratio of greater than 1 means the implied volatility of our call option is higher than the historical volatility of the stock, So that would mean that theoretically the option is overvalued. And of course, if we're looking for undervalued options, maybe those of you doing long calls and long puts, we might look for an IV-HV ratio of less than 1. Okay, now I'm going to talk about that a little bit more in a minute. That's not a criteria I generally use with my options strategies, and I'll explain why in a little bit. Okay, so our returns now. Everything's highlighted for you by category, but our simple returns, we talked about the downside protection already. We could screen for downside protection if I wanted to make a change. I only want to see those positions, those covered calls that have at least a 5% downside protection will make that change. The percent if unchanged if the stock doesn't move from its current price between now and expiration. And then, of course, the percent if assigned as well, the maximum return for the covered call position. Now, many of you, we talked earlier about how inside a specific strategy, there's also ways to trade them conservatively, aggressively, or, the average between the two. But what I mean by that is investors who are more conservative with covered calls trading might look to go deeper in the money. They might be looking for positions that are at least 5% in the money, when the call is 5% below the current stock price, to have a higher probability of getting assigned and earning that return. Okay, so I'll just plug in a range. I want to be at least 5% in the money, telling the system, show me only those covered calls that match my other criteria, but are just 5% in the money or more. Or if I'm more aggressive, I'm looking for growth in the position, or maybe I'm trading a dividend portfolio, and I'm trading covered calls against my dividend stocks to enhance that, but I don't want to risk getting assigned. I want to collect some premium month by month, but I don't want to have a high probability of being assigned. So I may just go 5% out of the money or more. And of course, those of you who are sort of neutral covered calls trader, which are looking to maximize your time value, which is the true profit, whether I'm trading a covered call or a naked put, for example, or a spread trade, we might want to limit this to be just at the money, where we're not going more than 3% or 4% in the money or more than 3 or 4% out of the money. And no problem, we'll just plug in blank to 3% in the money and blank to 3% out of the money. So we're narrowing it into that band. Other filters we may use when we drop down here to the price and strike price for the covered call, we've already put in our option bid price of 85 cents. You can choose to increase that or decrease that. Bid-ask spread, if you wanted to limit that, the bid-ask spread of the option to be just between 20 cents, 30 cents, or 40 cents. You don't have a wide bid-ask spread. The theoretical probability assigned, if you're doing in-the-money covered calls, you may have a requirement that you want at least a 60 or 65% return. 60 or 65% theoretical probability that you'll be assigned at expiration. Those of you doing credit spreads or condors, of course, you're probably using this probability field a lot. For bull put credit spreads, I'd be looking for the probability above theoretical probability the stock will be above my short put strike price at expiration. Bear calls would be the probability below the short call. And iron condors, we have a field there for the percent probability between. That'll be between the short call and the short strike, short call and the short put as well. The Black-Scholes ratios, that's another way investors use to evaluate overvalued or undervalued options. Percent to double, not something we'd probably use in a covered call, a naked put, or a vertical spread. The percent to double is more used by those of you doing long calls and long puts, where this is showing us that we're looking for the theoretical, what is the theoretical change needed in the underlying stock price based on the Black-Scholes model and the Greeks in order to have our option bid price double. Now, I mentioned that looking for in the money or out of the money, I prefer to use the percentages or the number of strikes to just put it within a range or look for a certain range in the money or a certain range out of the money. You can also use delta for that as well. That really all delta kind of measures. Your at the money option would have a delta of 0.5. As you go in the money, the delta gets higher. As you go out of the money, the delta gets lower. When we're talking about calls, of course, with puts, we throw in that negative value. So if I wanted at-the-money options and I use delta, well, of course, I'm going to use something along the lines of a delta filter of 0.40 to 0.6. So let me show those options that are right around the current stock price. If I wanted to go in the money, probably looking for a delta of greater than 0.60. And if I want it to be out of the money, I'm probably looking for deltas of less than 0.4, for example. But I just find it easier to use the range by number of strikes or percentage in or out of the money on these searches rather than use delta. Those of you doing long calls may have a delta preference. You're only looking to buy calls that have a delta of at least 0.65 or 0.75. And I do know there's many investors out there, their course is taught for credit spreads, bull puts and bear calls, where they're looking specifically only to enter in positions where the short option delta on a bull put credit spread, let's say, is greater than negative 0.3, meaning it's out of the money, but it's a 30% delta or 20 or 10, 30% or lower, for example. Okay, now, of course, let's move on, and the last tab in the options section is your liquidity. So our option volume today, we just put in a basic filter. We want at least 0 contracts traded today. But again, if you have a preference, do you like higher liquidity? You want to see higher open interest and higher volume today? We can just plug in those values. So I'll plug in at least an option volume today of at least 50, and then an open interest of at least 100. Okay, so it shows me the total liquidity. I know a lot of investors I talk to, or PowerOptions customers I talk to, they want an daily option volume of at least 100 contracts or more, and they want an open interest of at least 1,000 or 2,000. That's perfectly fine. Whatever your preference is, we can go ahead and put those in. Now let's go ahead and submit that. We might take all of our results out, but let's see. No, we still kept 2. So these are our 2 closest to at-the-money calls that matched our other technical and fundamental filters and still had the options requirements we were looking for. All right, let's just briefly look at the technicals. The technicals filters, the filters under the technicals tab, I should say, are going to be pretty much the same for every strategy. So we can screen by beta, the percent of 52-week range for the underlying security, average stock volume, historical volatility, a broker recommendation. We had a default there, but if I wanted to take it out, we could do that as well. Just delete that and rerun our search. Our relative strength index, we have some filters that you can use for Bollinger Bands. If you use Bollinger Bands as part of your analysis and stock chart review, and when you're reviewing a stock chart for a given position, we have the Bollinger Band range and the band width. And again, if you're not sure what that filter means, just hover right over it and it'll give you a description of what you may or may not want to look for. We did show the simple moving average field is already being used. Here's just a simple toggle. We're looking at stock price above the SMA 50, but if I use an uptrend a shorter uptrend, let's say I wanted to look for stocks that are trading above the 20-day moving average, we can just change that. Or if I want to see fields where our 20-day moving average is above the 50-day, we could select that as well. Some new filters that have been added, a little bit more complex, but if they're things that you use, they'll be very, very useful. So here we have our historical simple moving average trends. In addition to looking for stocks that are above the SMA 50, I can choose to see how many days. If I wanted a longer term trend, we could look for stocks that are over their 50-day moving average by at least 10 days. So the stock had to cross the 50-day moving average at least 10 days ago, or the 20-day moving average at least 5 or 10 days ago. We can plug that in as well. If I wanted to look for a shorter term trend, something that maybe just crossed the 50-day moving average, I might use the days cross SMA 50 over, let's say, less than 2 days. So in the last 1 or 2 days, the stock has just crossed the SMA 50. You can do a simple search for days up and down, and I don't really know how good of a filter that is, just more of a pronounced strength, more of a pronounced uptrend if you're looking for that. And then, of course, the MACD as well. We can use that also. I'm not going to get too deep into that right now, but we can look for where the MACD has crossed over the signal line, the EMA 9, over a certain number of days, or within, just as before, if I only wanted to see stocks where the MACD has crossed over the signal line in the last 1 or 2 days. I'll look for over blank to 2 and change that to under as well. And we can look specifically if the MACD is over the 0 line. I'm going to talk about that later on in the presentation as well. All right, so that's just your technicals. Moving averages, Bollinger Bands, averages and percentages of stock volume, beta, and so forth. Now your fundamentals, just your basic screens, stock price. If the stock has changed up or down today, if you wanted to only look for stocks that are up or down today, we can use stock change today. The other fundamentals, of course, are earnings per share growth. How much has the stock grown percentage-wise in earnings from last year to this year? PE ratio, PEG ratio. If we wanted to look for stocks that paid specifically at least a 2% dividend yield, well, we could just enter that into the filters as well and run our search. Market cap, price book, price sales, Z-score. Now, something that I always do with my income strategies, covered calls, naked puts, standard collars perhaps, bull put credits, bear call credits, and iron condors if I'm trading them on standard securities, I typically always want to look for stocks in those scenarios that do not have an earnings date between now and expiration. I'm going to filter that out. And of course, if I'm trading covered calls or maybe standard collars on a dividend-paying stock that's a core holding in my account, maybe Johnson & Johnson, the new Kraft, for example, something along those lines. Well, if I'm using just trading out-of-the-money covered calls, I may want to look for positions that do not have an ex-dividend date between now and expiration if I don't want to risk early assignment. Okay, and that's what's available in the fundamentals. And just as before, I'd go ahead and hit submit and run that search. And the last thing we want to talk about, we saw that briefly in our active lists. We have our sectors and industries and our stock lists. This was a theme search, so we're already just screening against stocks that are in the S&P 5-star list. We have other company lists you can use as well. The watch list, for example, well, back on the main homepage, we didn't really look at this, but you can create watch lists on your main homepage. So when you first log in, you're seeing just the change in your current stocks today. But once you create a watch list, you put in 10, 15, or 20 of the stocks that you're tracking or trading, we can automatically screen in any new position. It automatically creates a stock list for us that we can filter against in any strategy. Some of our other defaults, if you just want to look for stocks in the Dow 30 Industrials, or the Investors Business Daily 50, or the 50 in the cancel-in list, you can select the filter against those as well. NASDAQ 100, S&P 100, and the 5-star list, and there's some value line lists as well. Now, in some strategies, I might be looking against leverage ETFs, or maybe if we wanted to create a covered call search for ETFs, but we don't want to look at the 2 times, the 3 times, or the 4 times ETFs in some cases, well, then I'll choose to exclude. After I choose to look just against indexes and ETFs, for example, for my covered call screen, I then select to exclude the leveraged ETF so they don't show up in my search results. Okay, now in addition to that, the Create Modify List button here, that allows you specifically to create your own personal list. If you have a list of 20 to 50 stocks that maybe you've been tracking or you've just been trading over the past 5 or 6 years and you stick with that group, when we go to Create Modify List, we'll just be able to paste in our stock symbols or type in our stock symbols. We'll create our own list so we can choose at any time to screen just against those specific stocks. Okay, so those are the filters. I want to encourage everyone, if you have any questions at any time about the search functionality or something I'm reviewing, use the question pod on the GoToWebinar technology, the GoToMeeting technology there, and send that to me. I am flying solo on this presentation, but I'll check the questions regularly. So if you have a specific question, go ahead and send that in. All right, we're at 12:30, but let's stick with covered calls for just a moment. And what I'm going to do is go ahead and clear the filters. Okay, I'm going to empty everything out of all of our parameter fields. So now we see in our active criteria, our active filters, we have nothing selected. All right, we're going to create a search from scratch. And again, this is not a recommendation or suggestion. This is just showing you how simple it is to use this field. Okay, now I'm going to change my sort to percentage if assigned from highest to lowest. Okay, so I'm just going to, any of these filters that we can use for stock, technicals or fundamentals, or for the options, we can choose to view here in our search results. All right, let's talk about covered calls. What am I doing in a covered call? I'm buying stock, and I'm going to sell a call against it. Most likely, let's say that we're doing this because I want to get assigned month to month, still earn a reasonable return, and maximize the time value. So what am I going to look for? Well, I'm going to look for stocks that are, neutral to bullish, have neutral to bullish criteria, maybe in an uptrend, and I've got to put in the filters that match my goals. So let's say I'm doing covered calls, and I've developed over the years that my personal goal for a 30-day out trade or a 1-month out covered call is, I want a minimum downside protection of at least 3 or 4%, and I want at least a 3% return if assigned. Okay? And I know that to maximize that, I'm probably going to have to be at the money. Yes, it gives me a lower probability of assigned, but the at the money covered call on any given stock will always have the highest time premium, which is my true return when I'm trading a covered call. Okay, and I know I want to look for good stocks. So we've emptied out our filters. What am I going to look for? Well, I know I want to go just about 30 to 45 days out. So I could just choose June from our expiration time frame. Let me leave it at all months, and as we did before, we'll just go 15 to 45. Okay, now all these criteria that we have, you want to start off when you're creating a search in any strategy, keep it simple. Use the 5 or 6 criteria you want to use first, and then we'll be able to add more criteria to filter down our results. All right? So I want a downside protection. I'm going to go at least 4%, and I want a percent if assigned of at least 3%. Now, I know that this kind of search is going to dictate that the covered calls that I see are going to be at the money, slightly in the money, slightly out of the money. They have to be at the money to offer me at least a 3% if assigned and at least a 4% downside protection. If I wanted to go deeper in the money, I'd probably be looking for a higher downside protection, maybe 7, 8, or 9%, but I'd have to lower my expectations for percentage if assigned. And if I'm out of the money, speculating on more of an increase in the covered call strategy, I'm looking for lower downside protection, maybe just 1 or 2%. And I have that max percent of assigned higher now because that would include the appreciation of the stock price plus the time value premium I collected, or extrinsic value as well. Okay, but I know this is going to force me to be at the money, but we're going to do that with the range in or out of the money as well. All right, so I'm just going to go no more than 5% in and no more than 5% out of the money. All right, option bid price. Well, in addition to knowing what return I want, I know, based on my account size, what else do I know? I know how much premium I probably want to generate based on how many shares on average I trade and what my commission fees are. For example, if I have a smaller account or I'm only allocating $10,000 or maybe $7,500 to covered calls, I'm going to be looking at lower price stocks, but I may only be opening 100 or 200 shares at a time. Well, that's fine. But I also know that if my commission fee, say for example, is this is going to be a little bit expensive. These aren't my commission fees. Let's just say, for example, it costs me $14.95 to open 100 shares of stock, up to 1,000 shares, and I pay $14.95 to sell a call. Well, that's going to be a total of $30 in commissions. Well, so naturally, I know in order to make this work, I'm probably looking for a minimum option premium at that point of at least 60 cents. So if I do 100 shares and collect $60, 30 of that's going to go to commission, so I'm at least still making 30 cents. But at the same time, I'm probably looking higher. I'm probably looking at 75 or 80 cents. Okay? So I do have, you probably already have a range of what you'd like to see for bid price. Delta we talked about, percent probability assigned. I'm looking for at the money, so I've already limited this to probably a probability assigned range of about 40% to maybe 60%, somewhere in that range by looking at the money, and I'm okay with that. And again, liquidity. Hey, I want to see some contracts that traded today. A good rule of thumb is that if on average you're trading 200 shares or let's say 500 shares of stock and 5 calls to do a covered call, or your minimum requirement doing a vertical spread is selling 5 puts and a bull put and buying 5 puts. Okay. Well, a good rule of thumb for a minimum is we want our option volume today to be at least 5 times the number of contracts we're probably going to end up trading, and we want the open interest to be 10 times the number of contracts we're planning on trading. Of course, you can increase that. If you want higher liquidity, you just plug in what you want to see. All right, now, without doing anything else, let's review one thing. A lot of investors, many new investors I talk to, came from a seminar, they've come from training, or they've read somewhere on the internet that options can, covered calls trading, for example, can generate 6% per month, and you can have a high probability of being assigned, and month by month you're making 6%. Well, that's not always the case, and it's give and take. For example, keeping this other criteria that we've entered, which is very basic. Okay, we didn't do anything extreme here with the overvalued, undervalued, Black-Scholes ratios, put-call ratios. We just put in some very base criteria for a covered calls trade. What I wanted to show, though, is that let's say that I'm expecting to make at least a 6% return if assigned on my position. So I'm looking for a high percentage of assigned. I want a high downside protection of at least 10%, and I want at least an 85% probability of being assigned. Okay, well, let's go ahead and run that. I'm not putting in any stock criteria. I'm not selecting any lists or anything else. This is what I expected to see. My other criteria aren't really restricting that. The problem is that if it sounds too good to be true, it probably is. If we could find dozens of covered calls that offered a 10% downside protection, offered a 6% if assigned, and had an 85% probability of being assigned, everyone would be trading options, and everyone would be trading that strategy. Okay, you have to keep in mind what is possible, okay, what is realistic in your searches. If there is a covered call right now in the next 45 days that offers a 10% downside protection, at least a 6% if assigned, and has an 85% probability of being assigned, the tool will find it. But remember, everything works in conjunction with one another. Okay, so let's go back to our basic filters. I just always wanted to point that out to make sure that you know that your criteria have to be realistic, and you want to start off basic at first, and then we can always make changes to filter our list. Again, so as I mentioned, what did we do with the covered call screen? We forced it to be a little bit at the money using our percent in and out of the money range, reasonable option bid price, reasonable liquidity, 25% volume today, 25 contracts traded today, 50 at least open interest, reasonable time frame of 1 to 1.5 months out in time, and the return that we wanted. You probably have the same criteria already in your mind if you're looking to open a new covered call. So when you come into Power Options, you go into Search, you can clear those settings and just plug in your basic 5 to 8 criteria. Now, that's just for the options. We have 127 results. This is too big of a list. The whole point of this tool is to help us save time. I want to narrow this list down to really the maybe 20, 25, 30 stocks, or covered call opportunity, I should say, that I'd be interested in. 127 results is going to take me too long to go through. I'm not helping myself save time. But what haven't we done yet? We haven't even touched the stock information. All we did is put in our information for the option. And of all 160,000 possible call opportunities and over 3,800 optionable stocks, we've narrowed it down to 127 just with basic options criteria. All right, well, let's go into the fundamentals. What are some of the things I might look for? Well, I said that I know my price range. I might only be looking for stocks that are between $5 and $75 per share. And of course, if I'm doing a covered call or a credit spread, I'm going to try to, I always want to verify this. I will verify this with my broker as best I can and maybe other sources, but I do want to screen for stocks that do not have an earnings date between now and expiration. With positions as a covered call that still, if I'm collecting 3% premium, I have to remember I'm still risking 97% of what I invested in the stock, right? So that's a concern. I don't want anything that might fluctuate wildly or something that has an event coming up that's beyond my control, which might result in a 20, 25, 30, 35% loss. So I'm going to check the box there for not between now and expiration. Now, in addition to that, something basic I might use is the earnings per share growth. Okay? I want a stock that's shown good positive earnings from last year to this year. Some growth in the stock, if it's been growing over time, it's been growing over the last year, that's a good indicator that it might continue to grow. So I might just use a basic view that I only want to see stocks that have grown in earnings 5% from last year to this year. Okay, but let's go back to the technicals. And without getting too deep into the Bollinger Band stuff and the MACD and all these fun little technical indicators you can use, all I'm really going to use here is the average stock volume. I only want to see stocks that trade on average maybe 500,000 shares per day or 750,000 shares. And this particular field is measured in thousands. Again, if we hovered over that, it would tell us that. So I'm going to put in a range of average stock volume of greater than 750 to see only those stocks that trade at least 750,000 shares per day on average. All right, so that's not a lot of criteria for the stock, is it? I want to see some good volume in the stock. I know my price range, so I have to limit it to be between 5 and 75 based on my account size. I want to avoid earnings in my covered call or my bull put or my naked put, and I want to see stocks that have grown 5%. In addition to that, talked about the basic filter, I may want to see stocks that are in an uptrend. So I only want to see stocks that are currently trading above the SMA 50. Or again, you could, if you use the other ranges, you might choose to look for stocks where the SMA 50 is greater than the SMA 100, or where the 20-day SMA is greater than the 50-day SMA. But I'm going to stick with the basic one, stock to be greater than SMA 50. All right, now it looks like I just did a lot in the last 6 or 7 minutes or so. We entered in, let's count it out, technically two. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We technically put in 14 criteria of about the 65 or 70 that we could use. But these aren't a lot of in-depth criteria. I mean, if you think about it, this is what you might have already had in your mind when looking for a covered call position or even a naked put. The only difference in criteria I might use is instead of looking for a downside protection and percent if assigned, on the naked put screen I'd be looking for a percent naked yield and a percent to break even. This kind of correlate to downside protection and percentage if assigned. All right, but these filters are all the same. I want stocks that are in an uptrend, in my price range, avoiding earnings, showing some growth. I want to see some liquidity on the stock. I'm forcing it to be at the money. Okay, maybe that was a little bit advanced there with using the in the money, out of the money range. I have my minimum requirement for option bid price, my minimum return, and my time frame. There's some very basic criteria. Let's submit that. All right, and now what we're looking at is we've narrowed down our list now from the 127 total results that we had. There we go. Now your page is refreshing. To me, that is a perfect list. Now again, I'm not making recommendations or suggestions. What I'm saying is that this is the criteria that I might have in my mind. Based on how you trade, you have a listing of probably 5 to 10 criteria you know you want to start off with in each strategy, and that's how simple it is to use a search tool. We'll come into the search, we can hit clear these filters, we'll enter in our search criteria one by one, we'll run our search. Now, if I used, let's say you had 5 or 6 criteria that you would use for a bull put credit spread, and we'll take a look at that in just a minute. You put those in and you have 100 results, well that's okay. Now you can continue to tweak your filters and increase them, and we'll walk through that in just a moment. But this is a good, manageable list. I have 24 total results. There are 24 covered call opportunities for the June expiration, 24 days away, that match my return and my stock requirements. Some common ones in here: 3D Systems, Toll Brothers, SodaStream has been around recently. Green Mountain Coffee Roasters, well that's been all over the place recently. I still might avoid that. Electric Arts, Delta, and of course we go to page 2 and see some of the other ones. Now again, we're not getting into it in this presentation. My next step now that I've run my search and I have this result, I'm not going to go ahead and trade 3D Systems, buy the stock at 47.03 and sell a slightly in the money June 45 call. Gives me a good 7% downside and a potential return of 3.1% if stock stays above 45 in the next 24 days. What I have to do now is further research and analysis. So I'll use the More Information button. We'll take a look at the stock chart, company information, news and profile. I may go into the research for the stock or the option itself, but I have to do a little bit more due diligence to make sure the chart is going in a trend that I want. I know the stock's in an uptrend. I know it matches some other criteria, but I got to make sure I'm comfortable with the chart. I want to make sure that there's no recent news headlines or anything out there that may cause me hesitation to enter in the position. And of course, I want to graph it and see what my profit and loss chart would be and run my what-if scenarios there as well. So I'm not just going to take the first one. I'm going to look at those 3 things, and then if I decide that for whatever reason I don't like the chart, or I saw something in the recent news headlines that didn't match what I was my comfortability, well, I'm done with 3D Systems, and we'll just move to Kaufman, and we'll do the same process. Okay, now, once I'm done with my search, of course, I can click Save down here, and this will allow me to save the search. So we'll just call this Basic Covered Call on May 29th. Oh, it's today the 28th. Am I off a day again? That's the 29th, I'm right. And we'll just say during webinar. Okay, so you can save your search and then put in a brief description. So I've entered a title for my search, my brief description. We'll click Save This Search. Now it's going to look like it just refreshed the page for us, but if we scroll down below our listed trades now, my page is up. You guys just aren't seeing that the GoToMeeting hasn't refreshed yet, and it should be up now. There you go. Okay, so these are still the results that matched our criteria. But now, in our search, where if we went to the search first, instead of starting in the sample searches for covered calls, we would have seen the default settings, the initial values, the in-the-money default power options search, the out-of-the-money, and so forth. Well, those default searches are always available for us to toggle back to when we're in the search in a given strategy. But now that I've saved my new search, if I log off on PowerOptions and I go through the rest of the day, and then tomorrow morning I come back in, I log on to PowerOptions, say, hey, I want to open a covered call search. We click on the covered call tab, we click on search, and the system will pull up our saved criteria for us. So remember, whatever saved search or whatever default search you were last viewing, and that will be here. So now I can always have this as my starting point, my criteria, and on the fly I can toggle and make changes as I need be based on market conditions, or if I just want to make some quick tweaks to these results, narrow this down to maybe 15 results instead of 24, I can do that as well. All right, let's go into bull put credit spreads now for our spread traders real quick, and we'll go into search as we did before. We're going to do a basic search from scratch as we just did, and then we're going to do 2 basic searches here, and then I want to spend some time in the long calls and long puts and the others. We might go 10-15 minutes over. It's 12:50 right now. 10 minutes till 1. I know some of you may have to go. You're on your lunch break, and thank you for spending the time with me. I want to encourage you, though, if you have questions right now, go ahead and send those in, and send them in at any time. We'll take those also. All right, so we went to bull put credit spread, and instead of the sample searches, we went directly into the search. See the same kind of setup here. We have our listed trades. Remember, these are not recommendations or suggestions. We see we have 150 results. We know that's too many. That's not helping us save time with our bull put credit spread search. And we see that we're using the default search, the initial values. Okay, what's being used? It's right over here on the right-hand side in my active filters menu. We're looking straight for the June expiration. The leveraged return, the credit divided by the margin account, has to be at least 10%. We are forcing the short put to be at least 5% out of the money. We want a probability that the stock would remain above our short put of at least 70% or higher, theoretical probability. And again, that standard option volume of greater than 0. See some contracts traded today. Broker recommendation, less than 2.6. Stock price, greater than 15. It's kind of hard to do bull put credit spreads sometimes on stocks that are in the $5, $10, $15 range. So want to increase that. Again, earnings per share growth greater than 5. Why? Well, we're probably looking for stocks, bull put credit spread. We're neutral bullish. We want to show stocks that have good performance and are neutral to stable positions, but still offer a good premium. Okay. One thing I always say to my customers is that usually the basic criteria we just saw for that covered call screen that I put in, that average stock volume, stock in an uptrend, earnings per share growth range, and so forth, that's the same stock fundamental and technical criteria I'll use if I'm looking at a bull put credit spread, bull call debit spread, naked put or cash secured put trade, covered call, standard collar position, pretty much the same basic criteria. What's going to change is what I'm looking at in my options criteria. All right, so let's talk about that. Let's clear the settings. Let's start from scratch. And let's say we're looking for the standard expiration. So again, I can go directly to June, or we can leave it at all months and do our time frame of 15 to 45 days. Okay, we're 24 days to June expiration, so those will show up. Now, again, as we did before, we have our implied volatility field. So if I have a specific requirement of what I'd want to see for the implied volatility of my sell option in the spread or my buy option, or my implied volatility ratio, to make sure that the implied volatility of my short option is always higher than the long option, we look for an implied volatility ratio of greater than 1. I'm not going to mess around with that. What are my requirements for a bull put credit spread? Well, I know my time frame. I'm going to have a minimum net credit requirement, a minimum return requirement, probably a minimum out of the money range or probability range. They go hand in hand. And I'm going to want to look for stocks that are in an uptrend and maybe have some good fundamentals. Pretty much the same thing we saw in a covered call. So my minimum net credit, 5-10 point spread or even a 2.5 point spread, I might want a minimum net credit of at least 50 cents. Now the maximum risk here, this helps you limit your strike price ranges in a spread. So the maximum risk for any vertical spread is defined as the difference in strike prices minus the net credit, or for a debit spread, it's just a natural debit. But I know that I only want to trade spreads that are 5 point spread or lower, I could simply limit my maximum risk to be less than 5. So if I have a 5 point spread and I'm collecting a credit, it's always going to be less than 5. A better way to do that, however, is to just use this strike difference field. I'm going to skip ahead, but the strike difference field here is I can choose to look for spreads that are less than or equal to or greater than or equal to any price range. So I'm going to do my strike difference less than or equal to 5 points. So I'm looking only at 5 point spreads or 2.5 point spreads, or those with the single strikes might be 2 point spreads, 3 point spreads, and so forth. Okay, we're just going to keep that simple. You can leave that open if you do tend to do 10-point spreads or 15-point spreads, but I'm going to use 5 or less just to keep it simple. Again, my minimum return, we're doing leverage spreads here, so let's keep that minimum 10% return. You could go higher if you want to. We're going to keep 10%. Now, with my spread positions, I typically want my short put to be a certain range out of the money. And that also is going to equate to the probability we want of the position expiring worthless. But I'm going to start off with a basic range out of the money. I want my short put, the put that I'm selling, to be at least 5% out of the money or more. And I'm going to enhance this a little bit. I'm going to want my probability, the theoretical probability the stock will stay above my short put strike price, to be at least 75% or higher. Now, it's just a few basic criteria. I'm trading a credit spread. I got a minimum net credit, want a minimum return, got to be some range out of the money, going to limit it to 5-point spreads, and I want a 75% probability or higher. I didn't mess around with anything with implied volatility, short or long option delta or delta ratio, Black-Scholes ratio. Oh, volume and open interest. I'm going to have some requirements here. Let's keep our static to minimum 25 and minimum open interest of 50. Okay, so I increased it a little bit more. Let's submit that without using any stock criteria. So out of at every 20 minutes, we're building approximately 1.2 million bull put credit and bear call credit spreads, all right, which equates to a large number of iron condor potentials. But just with that basic criteria of knowing, hey, I want to be at least a good range out of the money, I want a reasonable percentage return, I want a net credit of at least 50 cents by 1 month out time frame, and open interest and volume today, we narrowed down the entire universe of about 1.2, 1.1 billion bull put credit, million bull put credit spreads to just 23. But I'm not done. I do have other requirements. And start out with first, well, let's go to technicals. Hey, I'm going to look for stocks that are currently trading in an uptrend again because this is a neutral or bullish position. And in my fundamentals, hey, I'm not worried about the stock price because I'm using a leverage position. But again, I may want to see just those stocks that have shown good earnings, that are more stable, shown good performance, and hey, I'm going to avoid earnings between now and expiration for my credit spreads because I can't afford a gap down because most credit spreads I'm looking for with this kind of probability are going to have a 10-to-1 risk-reward ratio. I can't afford the chance that the earnings are bad, the stock gap's 30%, and I take the 100% loss on one of these credit spreads because that'll wipe out 10 to 15 previous gains. Excuse me. Let's go ahead and do that, and let's just submit that. I hope we have something left. We should. Okay, so fantastic. Great. A dozen results. This search is not complex. All right, it was a very basic criteria. A minimum time frame, minimum net credit, minimum return. I want to be a little bit out of the money in my probability, and I know my strike price difference, some good volume and open interest, stock in an uptrend, stocks that have shown good earnings, and I want, good earnings growth, and I want to avoid earnings between now and expiration. That narrowed it down to 12 possible bull put credit spreads for the month of June. Now, I'm not saying that, again, I'm going to trade a bull put on Netflix, on Apple, but this is where I'm starting. And this is my starting point for my research. Some of you may be looking at smaller premiums. In other words, you might see 2-point spreads or 1-point spreads where your net credit is probably going to be 20 cents or 25 cents. And that's fine. You could just lower that down. But see how simple it is to just use this. If you're planning on trading any strategy or looking for new positions in a given strategy, you already know a basic concept of the 5 or 6 criteria that apply to you. You can use any of our defaults or those sample searches as a stepping stone to create your own personal search, or you can just come in and clear the filters and start putting in your basic criteria one by one just to identify the positions that you want to see. All right, one more thing I want to do here on bull put, and then I'll spend some time on the long calls as well. What's the other trick? Well, let's be honest. We know there's been a large increase or a reasonable increase in the number of stocks, indexes, and ETFs that now offer weekly options and continuous weekly series. Common question I get now is, do you guys at PowerOptions support weeklies? Of course. We supported weeklies since they were released with the SPX about 3 years ago, believe it or not. The SPX, Standard & Poor's Index, was the first one to have weekly options. They had them for a long time before people really noticed them. But it was about 2 years ago, I believe June of 2011 or so, when the standard stocks, the first 4 stocks, I believe, was Apple, Bank of America, I forget the other 2, Citibank, and there was one more, Google perhaps, that started offering weekly options. There are now, as of Friday, during our open discussion, open forum presentation, we always run a search for weekly options to see how many securities now offer weekly options, the continuous series. I believe I had 208 stocks, indexes, and ETFs that offer weekly options, and about 30 securities, 29 I believe it was, 29 securities that offered the continuous weekly series. Oh, here I have I'm sorry, on my notes I have my numbers from Friday, just so everyone knows. There are 208 total securities that now offer weekly options. 166 of those are standard securities, standard stocks, Apple, Baidu, and so forth. 42 of those are indexes and ETFs. Of those securities, 29 of them now offer those continuous weekly series, such as Netflix and Apple, where you'll always have 5 expiration cycles in a row. And so for Apple, I'll have the expiration for May 31st, the weekly series. Then we'll have one for June 7th, June 14th, June 22nd, which I think is the standard expiration, and then June 29th. We'll have 5 series in a row that you can choose from. They're just trying to make it complex for us. In any case, I'm a weekly bull put credit spread trader. I'm not, but let's say for sake of argument I am. I've come onto the screen, and I want to do a search for weekly bull puts. Well, I've created a default search here, weekly bull put credits. You'll see that in the bear calls, I believe in the iron condors as well, for you to use as a stepping stone. You might also see the similar search in the sample searches. We're just looking for weekly bull puts or weekly bull puts on the ETFs or indexes. But let's start from scratch. I came in, I cleared the filters. I only want to look for securities. Now this is hard to do on a Wednesday webinar because the series for next Friday, that's 8-9 days away, hasn't been released yet. They won't be released until tomorrow morning. So we're going to have to keep it simple and look for the ones that are 3 days away. All right, so how would I do that? Well, I can choose all weeklies, and I'm going to limit my time frame to 0 to 5. Why? Well, I don't want to see the continuous ones right now. I don't want to see the 14 days out, the 28 days out for those 29 securities that offer continuous weekly series. All right, so when creating a weekly search, if I'm running my search on Thursday, my typical days to expiration is going to be between 2 to 9. Why? Because when I'm running a search Thursday morning, I want to filter out the weekly options expire in one day, that Friday, 1 day away, and I want to include the ones that expire next Friday. So I'll put in all weeklies and 2 to 9. But because they haven't been released yet, let's go 0 to 4, so we're just looking at Friday. Now, the real key to a weekly search, my friends, whether you're doing a weekly search for naked puts, for covered calls, for vertical spreads, mostly the income-generating strategies are best used for these kind of techniques. The key here is to keep it as simple and realistic as possible. So to start off, I'll put in all weekly 0 to 4, minimum net credit of 5 cents because we're only 3 days away, so I can't expect too much. Percentage return, want that to at least be 0.5%. Let's see here, what else might I put in here? Oh, range out of the money, want to be at least maybe 1% out of the money. A good probability, of course, let's keep that at 70. I'm going to submit this without any stock criteria, just see if we get anything. We might, we should, but let's just check. All right, so let's submit that. As basic can be. Fantastic. All right, so we've got a lot left in there. But I still have to remember what I'm doing. I'm still in a bull put credit spread. Okay, so what are the other things? I can increase my probability now. I know that if I'm at least getting a 0.5% return for 3 days, I might increase it to 1%. But before I do that, I have to put in my other requirements. Technicals, okay, let's just go stock in an uptrend. I want something that's trading above the 50-day moving average. Some stocks may have crossed below that in the last 2 days. But we're going to do that. And the technicals, and that's it. Fundamentals, I'm not worried about stock price because it's a leveraged trade. Do want to avoid earnings between now and expiration. And let's not worry about the earnings per share growth. I would put this in, but let's not worry about it right now. Let's just make those subtle changes, avoid earnings, stock in an uptrend. Let's submit that. I also haven't restricted my strike price difference. No problem. Okay, 386. Well, that's good. Now, what does that tell me? I'm seeing a lot of positions here that have a good return and a good premium. That we are avoiding earnings between now and expiration, so that's good. If I was comfortable with a 5-cent credit for 3 days, but I see I have too many results, that means I'm probably going to be comfortable with a 15-cent net credit, aren't I? Percent return of 0.5, maybe we can go as high as 1. Okay, let's submit that. Now, I might go the other way because I'm a little bit more conservative. I might have increased my probability, my range out of the money first and kept my returns. But we'll do that now. Still have 171 results for 2 days out technically. All right, I'm going to increase my probability up to 75. My percent out of the money range to be at least 2. All right, because if I was happy with being at least 1% out of the money, I'm going to be happier being 2% out of the money as well. All right, so 72. Knock that down by about 50%, from 170 to 72. That's good. So now I could go back in and add my earnings per share growth to look for more quality stocks. What if, let's say that we have this base criteria, keeping it simple for the weekly screen in any strategy. But what if now I decided, oh, you know what? I only want to trade bull put credit spreads weekly series on the indexes and ETFs. No problem. We go to lists. We keep our other basic criteria, and I'm going to just select here from our drop-down menu of defaults, indexes and ETFs. Let's submit that. All right, so we're looking at bull puts, expire on Friday on indexes and ETFs. And I've got some things in here that make sense. The S&P 500 index is down here at the bottom, but everything else in here is either an ultra short or an ultra or a 3 times ETF. Remember we talked about before, these things have wild fluctuations, not maybe the best thing for a bull put credit or bear call credit. It's that catch-22, isn't it? These 3 times bull and bear ETFs tend to fluctuate more wildly, so that means that we have a better implied volatility and a higher premium. If we go further out of the money, we'll have a higher relative premium, but at the same time, we have more of a chance of these things swinging wildly against us. So all right, I'm looking for indexes and ETFs, but you know what? I don't want to do these 3 times bull and bear ETFs, so we're going to choose to remove now our leveraged ETFs, and let's submit that. So that was just, basic of 5 steps of creating a search with the weekly series, and then we extended it to indexes and ETFs. Whenever you're creating a search for a weekly position, go very basic. Clear the settings, put in your minimum premium, minimum requirement, minimum range in or out of the money, depending if you're doing a covered call, a debit spread, or a credit spread, and your minimum probability. And start with that, just those 4 or 5 criteria. You'll have a narrowed list down, and you'll see if you can increase it more. That's a good list now. It's just the SPX and the Russells. There's an OEX in there as well. Doesn't look like any of the ETFs match our requirements. It's just the standard indexes at this point. And, of course, we remove the ultras. All right. All right, very quickly, because we're 5 minutes past. But I'm just going to go to long call now, and I'm going to go to search. Again, at any time, if you have any questions, go ahead and send those to us. When we go to the long call search, what do we see? Similar format to what we saw in the last strategies. We have our basic results. Not recommendations or suggestions. Here we have our default criteria that we can use as a stepping stone. We can go ahead and make our changes based on any of these values. Here, delta, our default search, we're looking at a certain delta, Black-Scholes ratio, looking for slightly overvalued to undervalued long calls, in the money, out of the money. The technicals, the fundamentals in the list are all the same that we saw for the covered call and what we just reviewed with bull put credit spread. The only thing that's changed really is your criteria. Again, with the single option strategies, we just looked at bull put where we had choices in implied volatility for the implied volatility of the sell, the buy, and the implied volatility ratio. But in our single option strategies such as long calls, we see the same fields for covered calls as far as implied volatility goes. The implied volatility, percent implied volatility range, IV over HV, and IV over SIV. Range in or out of the money depending on what you're looking for with your long call positions. Now what you don't have is a return category. We had that for covered calls, we'd had it for naked puts, but in long calls or long puts, the return is essentially infinite. So we don't have a return, but you can still set your strike price range, bid-ask spread, probability, the percent to double. This is where you may use this. You want to look for calls that if the stock moves up 3 or 4%, your option bid price might double. But remember, everything goes hand in hand. I can't look for an in-the-money call, a deep-in-the-money call that has an intrinsic value, and then assume that I want my percent to double to be less than 4%. Well, if you're that deep in the money, you're probably going to need a 10 or 12% increase in the stock price to have your option bid price double. Okay, so everything as before we saw with the covered call screen, everything goes hand in hand. And you still have your liquidity of option volume and open interest, and everything else is the same. So it's still the same setup. You can set your time, your expiration time frame, your IVs, and implied volatilities. Not a return field now, but you do have the percent to double, and you can put in the other criteria for option ask price and so forth. And then, of course, for the time spreads, calendar calls, for example, same format. The only thing that changes now is what's in the option tab criteria, because now we have to select the criteria we use in or out of the money, price, and so forth for 2 options. So we have our near option, the option that we're selling. So we selected June, and instead of January 2015 leaps, I'm going to change that to all months, force it to be 180 days, so at least 6 months out to, let's just say 600 days. Okay, that's about maybe 2 years out in time. And I can filter for the time value for the option that I'm selling, the near-term option again, the short option, or the long option, of course my time value ratio. My implied volatilities for the sell option, the buy option, the ranges, the implied volatility range for the sell and buy option, of course, the implied volatility ratio. Minimum net credit shown as a negative, so it's what's my maximum net debit. I only want to pay $10 for the spread. Max return, downside protection as well, percent of funds changed, and then show in the money and out of the money for your near option that you're selling and the far option that you're buying. And then your deltas, short option delta, long option delta, delta ratio. So it's the same type of fields. Okay, it's the same fields. Our technicals, fundamentals will all have the same information. All that's changed is what's in the options tab. And of course the calendar spread gets a little bit more complex because we're looking at two different options that have two different time frames. In the credit spread, we are looking at two different options, but we have a different sort of setup there because it's the same time frame. All right, now one last thing. We talked about saving the search. We talked about just changing on the fly how you're sorting the results. One thing I didn't show is that you probably noticed this in some of the default searches. Let's go back to covered call where we were here, and let's go into search. And remember, it's going to pull up my last saved search that we just created about 20 minutes ago. There we go, basic covered call on May 29. Now I have a wide range of fields selected here. Okay, at any time, in addition to customizing your search criteria in a given strategy, you can customize your views. You just go and choose columns here. This will take you to a configuration page. Let me start from scratch. I meant to do that before we started the webinar, but I had a phone call right before we started. So on our covered calls, let me reset to default settings real quick, and we'll save those columns. Now it's going to prompt me to close the window so I can simply refresh the page. And as it reloads, I still have my same trade results that matched our saved criteria, but now I just have the basic view of what you see. The stock information and symbol, current price, the strike price, and the days to expiration of the call we'd sell, your your bid price, for the option, the total net debit, and then your downside protection, unchanged, percent of assigned, and probability. Okay? But remember, when we created our search, we added things such as range in or out of the money, the option volume today and the open interest, average stock volume, stock price, that's already taken care of, sorry, earnings per share growth. So we added in some filters. Well, if I'm using those filters for my search, I'm going to want to see them in my search results to compare the different positions that match my criteria. So we go back into choose columns now. And you can pick and choose a variety of different things, but based on what I selected for my filters, I'm going to want to see option volume and open interest. So we'll just check those boxes. Let's see here. I didn't have, range in or out of the money, percent in or out of the money. I want to see that. You can select your Greeks, your time value, the option ask price if you want to compare the bid ask, or just look at the bid ask spread, IV over HV. And then on my stock information on the left-hand side, I wanted earnings per share growth, average stock volume, of course, that's percentage volume. There we go, average stock volume, and the SMA 50. I might want to see that as well because I was looking for stocks above the SMA 50. The other thing I might want to check here, even though I'm filtering for positions that don't have an earnings between now and expiration, I'm going to check the box for earnings date. All right, so let's submit and save our new columns. In any strategy, again, you can customize the results page the same way. You customize the covered call that we just did. So I've added my new columns. So I have my current volume, my open interest, our earnings per share growth, average stock volume. Remember, that's measured in thousands. So for 3D systems here, so you have an average stock volume of 5,243. Well, that's 5,243,000 average volume in the last 90 days. The SMA, 50-day SMA is at 37.34. Yeah, D is at 46.84, well above that. 3.9% in the money. And the earnings date's on 7/25, way after June expiration. Okay? So you can customize the search results as well as customizing the criteria. All right. Well, hold on one second, ladies and gentlemen. About that, folks? Okay, so that about wraps it up. I encourage you to ask any last-minute questions. If you have any questions about the search tool or the search criteria, go ahead and send those in now. Remember, basic tips on the search tool. When creating a search in any strategy, keep it simple. Start with the basic criteria you already know. What kind of minimum return am I looking for, minimum volume, minimum open interest for the option, liquidity, what kind of stock trend am I looking for? Am I bullish? Am I bearish? Maybe I want to see stocks in an uptrend and compare to the 50-day moving average. Keep it simple. Put in the 5 or 6 criteria that mainly apply to you and what your thoughts are on trading the strategy first, and then you can come back in and narrow them down one by one, adding one criteria at a time to filter down your results. It's always a good idea to start off first, clear the settings, put in your 5 or 6 criteria, submit it. Okay, we end up with 200 results. From there on, if I'm going to change criteria, it's always best to go one at a time. Okay, so I have my search criteria entered. I had 170 results, and I said, oh, well, in addition to that, I'm going to change now my earnings per share growth, my average stock volume, my market capitalization. Let me add that in as well. Let me put in another higher volatility range, and you hit submit, and now there's no results that match your criteria. We are not sure which one of those next 5 actually, removed most of them or countered all of them. So once you have your basic search of that 5, 6, maybe 10 criteria you started with, when you start adjusting criteria, do one at a time and hit submit each time you do that. Okay. Okay. Dave asks a question. Does your search tool give suggestions for managing the trade after you enter it? No, because that's a search tool. The search tool doesn't do that. Give me 1 second, Dave, and I'll bounce right back to your question in just a moment. Okay, so remember, we always want to keep it simple. Do not feel that you need to use every criteria. Okay, there's a lot of criteria in each strategy. You don't have to plug something in each one. If you go in and you start plugging in numbers for each of the criteria available, you'll get no results. Okay, start with just those settings that you know. But it never hurts if there's settings that you don't know, if there's parameters you don't know. For example, you've never used Bollinger Bands or you've never used MACD. It never hurts to learn. Go through those pop-up definitions, go through some of the help papers we have on the site, and give me or Ernie a call anytime you have any questions about those. Okay? So remember, when screening for ETFs, I always like to remove the inverse of the leveraged ETFs. When screening for dividend stocks, it's always best to use no list to open it up more and then put in the basic criteria you want for the dividend. I'm just going to flash this up here on the screen, the prices for our 20-minute delayed subscription. We do offer a real-time service as well. And then our professional, which is really the real-time plus the historical data, is $100 per month as well. Okay, now to Dave's question. We're not going to get a chance to get into this today because this was on the search tool. Dave, once I've found a position, let's say we did our due diligence now. This was at the top of our list for our covered calls. I like the stock chart. I like the company information. I've done my research, and I'm going to trade the covered call in 3D systems. Well, we do have a broker link set up to Options Express and Brokers Express. I'm not even sure if Brokers Express is still available, but to Options Express right now. So I can set that up and I can go ahead and place the trade. However, if I'm using a different broker, no problem. Log on to my broker, place in my covered call with my net debit requirements and my minimum premium requirements. Once the trade's filled, I'm going to come back to Power Options, and we're going to select Add to Portfolio. As we enter our positions into the portfolio, well, I have some already created for our webinar purposes. We'll put this into the covered calls portfolio. So let me insert. The system knows I came from a covered call screen. So it already knows the stock, the option, and the current prices for both from our search results. Let's just put in a basic view of 100 shares, 1 call. I'm going to leave the commission fees at 0. This is a paper trade, just an example. So let me add new position into my portfolio. As I enter my positions, Dave, into my profit and loss portfolio, as we're tracking our positions, I'm sorry, now when we come on, we'll go to my portfolio, we'll go to profit and loss portfolios. This is where I usually come, my first step when I first log in. Actually, when the market opens, this is where I go. All right, so here are my covered calls. They didn't manage these in May yet. I'm going to do that soon. I meant to clean them up before the presentation, but again, I got that phone call. Now, 3D Systems is the one we just entered. Okay, so it shows me here my information, my original stock price, been in the stock 0 days, sold a call. It has 24 days to expiration. Here are my current prices. I'm losing $10 on the short call already. That's just due to the bid-ask spread. Now, over on the right, we see the total position cost. Okay, we see it as a linked position as a covered call here, but now we're looking at it as a total position. My total debit was $43.64. My original expected return is 3.1%. Right now, we have a loss of about 0.2%, just due to the bid-ask spread on the short call. And the expiration value. Now, we're not saying this is where the stock's going to be at expiration 24 days from now. All it's saying is that if the stock stays at its current price between now and expiration, what is your gain? Okay? And, of course, if the stock stays at $46.84, we'll get a sign at 45. We'll make our full 3.1% return. Now, let's take a look. Here's a position from April 22nd. It looks like we've rolled the call at least once. On April 22nd, it looks like we did during a webinar. We bought shares of LLY at $57.60. Okay, we had probably sold the March call, and as the stock started to fall, it's fallen from $57.60 down currently to $53.66. We rolled that call down, and we're now holding a June 55 call. I think we started with the May 60 call, slightly out of the money, and then we had to roll it down. How do I know we've rolled it? Well, look at this. This is my effective cost per share. We originally had stock at $57.60. looks like we've lowered it by about $1.60 or so, $1.53 to $56.17. Okay? And the other thing that this shows me, because I know the system, is I opened this position on 422, but this most recent June call was sold on 5/1. Okay, so that tells me that sometime after this, most likely due to a roll. It's not telling me that I've rolled it, but I can see that by my effective cost per share. All right, so are we still in an issue? I think we kind of are. We lowered our cost down to 56.17. We sold the 55 call for 91 cents, so this put us down. Ooh, this wouldn't have been a positive return if assigned. Our cost base would have only dropped down to about 55.20, but we're trying to get assigned at 55, so that still would have been a loss. We got assigned. This was obviously a protected roll down. And the stock's at 53.66. So to be safer, we may want to consider adjustment at this point. And another reason why is it's dropped below my lower stop limit of 55.50. I entered that into the alerts field here. I'll just show you that real quick. You can set a variety of alerts once you start tracking a position in the profit and loss portfolio there. So we set an alert at 55.50. Our alert's been triggered now, so I might want to manage it. Okay? So in the search tool, we don't look for the management date. When we put it into our profit and loss portfolio, now that I've got it, what am I going to do? I'm going to click the More Information button in my portfolio. I'm going to go to Position Actions, Position Analysis. The position analysis is going to give me a breakdown of my current covered call in LLY using my current effective cost per share. So 56.17. As I mentioned, we rolled down to be safer to try to hedge some of the loss, but we would have been assigned to the loss in this scenario because the strike price here is below our cost basis. We see that right now we currently have our original expected return after we rolled this down was 0.5%. It was better than taking a 7%, 8% loss. Right now our current liquidation value, we have a loss of 3.7% after 28 days. And my future expiration value, if the stock stays where it is to June expiration, we'll have a loss of 2.9%. This difference here is the time value of the call decaying in my favor. And it's still not a great difference. All right. So we scroll down below. And what we're shown now is some potential rollout opportunities for our position, including all of the history. There's that, there's the May 57.5 call, we sold the May 57.5 call for $1.50, bought it back for $7, and rolled down the June 55 as the stock fell. Well, now as the stock has continued to fall, if I buy to close my June call right now for 45 cents and sold the July 52.5 call, well, we received 223. This adjusted net credit, this is taking into account what I originally received, the 91 cents for my June call, buy it back for 40 cents and sell this for 223. My adjusted new net credit would be 269. Now this gives me a 4.8 downside protection, but unfortunately it's still a loss of 1.8%. However, if I get assigned the max return. However, there's a chance to maybe turn this negative into a slight positive. Well, I could go all the way out to August, but in July, taking my range from 24 days to 52 days now, we could roll to the July 55 call, would give us only a 2.5% downside protection, but if we're assigned, we might make a positive 0.4% because of this little increase about 90 cents in premium. Now, it's great to see things numerically, but as you're evaluating your rollout opportunities there, in any strategy, this is just for covered calls, but in any strategy, I'm tracking bull puts, you'll see this screen, you'll see rollout opportunities, the married puts, standard callers, long calls even, you'll see potential rollout opportunities based on what we would tend to look for and what our customers over the years have told us they would look for as a rollout opportunity. All right, so great to see it numerically, but it's always better to see it graphically, right? So let's go to our July 55 call. We'll go to Simulate Trade, and here we see a side-by-side comparison. On left in red is my current covered call position on LLY. My current loss is 3.7%. Current gain is, max gain is a 0.5% loss, and currently a 3.7% loss. If I buy to close my June 55 and sell to open the July 55, my new outlook is we have a cost basis lowered to $54.76 for our 100 shares. Max profit would be $24 or 0.4%. And down below, we see the comparison on top of each other. The position in red, hockey stick graph in red, that's my current covered call position on LLY. And if I made this adjustment, the blue line is showing me my new covered call position. So I can see it numerically. Oh, there we go. Numerically and graphically. Using the portfolio tool, we track our open positions in the profit and loss portfolio. As we make adjustments, that records in the history. We'll always be able to view that. And then as I'm looking for an analysis of rollout opportunities or adjustment, we show you some potential opportunities. We're doing all the heavy lifting in the math for you. And then the simulate trade feature is very powerful to compare your existing position to your new potential position if you adjusted it graphically side by side. And with one click, I could decide to make this change to my portfolio. Now, what I want to do real quick, I'm going to go to Learning Center. And from our Learning Center menu, I'm going to click on Webinars very quickly. Anytime have questions, can we look at how would I use the portfolio? How do I use the search? Well, you can come into our archive presentation. Let's go to Power Options Tools Archive. And right here, here's a full introduction, Dave, to those Power Options portfolio tools. You can watch that at your convenience. This is a public page, by the way. You don't need to be logged in. Let me send that to you in the chat window. It's just powerop.com/webinars.asp. Okay? So there you go. You can come here. I can go to Power Options Tools Archive. Take a look at a presentation on the Power Options Broad Overview, the new streamlined search tool that we looked at today. This presentation, Intro to Power Options Covered Call Focus, that's going to be replaced by the presentation we did today. I hopefully will have that archived for you by tomorrow morning. There's also some other headers here, Options Strategies Archive, Power Options Open Discussions Archive as well, Radioactive Trading Archive, some basics there on using the Power Options tools for radioactive trading. All right, so at any time, if you're logged in, you can go to Learning Center, and then you can go to Webinars, or you can go to that public page, powerop.com/webinars.asp. All right. Well, ladies and gentlemen, thank you very much for joining me this afternoon. I hope you got a lot of useful information. We hope to see you pretty soon on one of our next live presentations. Tomorrow at 12 noon, Kurt Frankenberg's hosting the Introduction to Radioactive Trading presentation. And Friday at 4:30, I'll be hosting that Open Discussion, Open Forum presentation as well. Take care, ladies and gentlemen. Thank you for joining me. Have a fantastic week, and we'll see you soon. Good night.